Hi, everyone. I wanted to follow up with our conversation that we started earlier this week when we went over in depth the calculation of the absenteeism cost associated with the first exercise of Module 2. And we got a chance to do a high-level overview of the second exercise, calculating separation cost. But I wanted to record this to provide some additional information, sort of a walkthrough of that exercise and how you come to that full calculation of separation expenses for the company ups and downs, as noted in question or exercise 1 on chapter 5 within the text. And so within that, that exercise, what you want to start with is understanding that there are 4 components or pillars of cost associated with separation as laid out within the text. Separation costs, those are the expenses associated with the termination of the employees themselves. Then there's the cost of replacing those team members, training the new team members, and then finally, any differences in the performance of the team members between those who left and those who joined the organization. On page 170 within the text, also, they'll provide you with a worksheet highlighting those individual elements and the different calculations of cost that ultimately make up each one of those total costs within those pillars. And then that fourth is the performance cost differentiation. It's not listed on that worksheet, but it is one of the 4 components of separation costs, and we do want to include that one as well. So where do we start? Where I want to start is, in looking at this exercise is understanding the organization. It's got 4,000 employees with a 27% turnover rate. So based on the calculation of turnover within the text in terms of how they want to calculate turnover, I'm looking at 1,080 terms per year for ups and downs. That's a 27% times 4,000, 1,080. Always remember then what's the prompt at the end of the exercise and ask you specifically for what are the total turnover costs for ups and downs last year. So it defines total employee costs plus last year, so a 12-month period. That's usually assumed, but I did want to make sure you explicitly see that. And then a second question, how much then per employee who left? So there's a total expense, and then there is an expense per employee who left, not expense per total employee, because that's 4,000 employees, but there's 1,080 who left. And so that will be important for you as well. And again, as I mentioned with the absenteeism exercise, that per employee number is a very good benchmark to use. Your number of employees may change up or down on an annual basis, and so the total cost may change up or down, but understanding how much it costs per employee who leaves is a good fundamental baseline metric to have in place to understand your turnover expenses. So let's look at separation costs. The first item or element that I'm looking at is exit interviewing. So this organization states that they're going to exit interview all of their terminated employees, everyone who's left. That is 1,080. It takes, that's 60 total minutes, 1 hour per exit interview. That's 45 minutes to do the exit interview, 15 minutes to prepare for each one. And that HR specialist, we'll hear about that person throughout the exercise. They make $33 an hour. And so 33 times 1, that's $33 per exit interview is how I'm seeing that. And then we're going to multiply that times 1,080. And so I'm going to share a couple of things. I'll have my screen shared throughout the exercise, this video, so that I can just show you if some of you may be more visual and you want to see the calculations. And so I will share my screen so that we can just talk through a couple of those calculations. And I'll also include the web-based calculator as well from time to time to compare to totals that they're getting within that exercise. So share the screen. All right, I'll have a few calculations noted around here that we'll go over specifically when things start to get a little more complicated. But what I did in Excel was just to look at, again, you don't have to do this in Excel. This is really just meant to show you the visual component of this calculation. $33 per hour here times 1 hour per interview times 1,080 total separations. And that's going to give me a number of $35,640. Now, second component that I'll do is I'll pull up our calculator here. Remember, just a word of advice. This calculator does time out if you haven't been active in it for probably 5 to 10 minutes or so. So I recommend that you either plan to fully go through the entire exercise in one sitting without inactivity, or you may also consider writing these numbers down on a piece of paper or another document. And so if you have to come back to have those stored, you can easily type them in without any issue. So you'll see that it does have you break down time required to prep as well as the actual exit interview times the interviewer's pay rate of that $33 an hour. And there's a total of 1,080 turnovers during this period. Now, look, if there is a bonus point available to any student who can tell me why this number changes down here, this cost of exit interview, as I showed you on my calculator, which is Excel, usually a pretty accurate calculator, I'm coming up with 35,640. Now, if I were to say, let's say 0 time to do the interview in 60 minutes for the actual interview, that's the same amount of time. But when I come down here, it actually changes the calculation of the exit interview to 72,000. If I do it the time required prior to interview at 60, and then add in 0 here for the time required for the interview, it actually comes up with 35,640. And so what that's telling me is, in addition to the time that the HR specialist is spending on the exit interview, there is time spent for that team member as well, right? So every team member who's leaving the organization, we're also paying them to complete the exercise, right? And so I'm going to go ahead and put in 15 minutes to prep, 45 minutes for the interview. And so the second component that's really important here is calculating the cost of the terminating employee's time. That's the second element of the calculator here, and that's a fundamental calculation that you're going to use over and over again as you estimate separation, replacement, training costs, etc. Right? So it's similar to the absenteeism exercise, and I'll just give a quick example of why it's important to do this. 30% of these employees at $28 an hour, and 20% of these employees at $28 an hour, et cetera. Every organization has an average employee average hourly rate, right? For ups and downs, it could be $30 an hour. As we take all 4,000 active employees right now, maybe the average hourly rate with benefits is $30 an hour. But what is important is the nuance of understanding that when we're calculating turnover costs, we're not just interested in the average rate of all employees. We're interested in the average rate of the team members who left the organization, right? And that's, sometimes you may think, well, that's got to be the same number, pretty close, right? I mean, but not necessarily. If we had a much higher turnover rate amongst the highest paid people in our organization, well, then our average rate for those left would be much higher than the average rate of all employees across the business, right? So that's why it's getting us to calculate turnover as an average hourly rate for these terminations based on the proportion of people who are leaving. And as you can see, frontline team members are making up the majority of that, and they have a higher rate. These production employees do appear to leave at a high rate, and they have a high hourly rate as well, right? So that might be a driver of having a higher average hourly comp rate for those who are leaving compared to just the average overall workforce. Now, it doesn't give you here when you do the calculation what that weighted average hourly rate is. I did add it into, I wanted to just do an average myself here. And so I did. I used those same numbers, production, clerical, and management. The text is going to give us 40% for production, 36% for clerical, 24% for management. And then I included the hourly rates here. And so what you do is you're going to calculate the percentage times the hourly rate. It's going to give you a reduced number, right? A weighted number. And I'm going to do that for all three, and I'm going to add those three together, and that's going to give me weighted average rate of $34.40. Now, again, to reiterate, I'll try to do this throughout. I'm showing you a couple of different ways in which you can make the calculations that need to be made in order to submit your exercise. So you don't have to do both. You don't have to do the Excel approach with the calculator. You can do the calculator by itself and present screenshots and share your estimations of expenses. You can do it in Excel. You can do handwritten. Any of those are acceptable, as noted in the in Moodle. But I just wanted to show you a couple of ways of really trying to understand the numbers so that you'll have a full grasp of what we're trying to do here. So that's calculating the cost of the terminating employee's time. Then there's admin functions. So it takes some time for us to process a termination, right? In this case, the text is telling us it takes 90 minutes per term. And it says the HR department is doing this, right? Now, it doesn't tell us in this case another rate of an hourly rate of the person in HR who's doing this. But we have that trusty old HR specialist rate of $33 an hour. And so that is out there for us, that HR specialist rate that they gave us earlier in the example. That's what I chose to use. I felt that was an appropriate approach. But if you want to say, well, salary.com says that the average hourly rate with benefits markup for an HR assistant is $18 an hour, you can do that if you want to explain that as your justification within the work you turn in, that you came up with a different rate for the person who actually processes the term. But in my case, I went with just, the $33 an hour rate. And so if I wanted to calculate that number again, I'll just show you visually down here, kind of a blank space. We're dealing with $33 an hour. It takes 1.5 hours per team member or per term. And how many terms do we have? We know we have 1,008, right? So I'm going to multiply all of those together. And I'm going to get $53,460. So that is the amount of administration time taken for a $33 an hour HR specialist to spend an hour and a half per term for 1,008 terms over a year to ultimately process terminations within the organization. Then there's separation pay. So does the organization pay time to the employees whenever they leave the organization? Ups and downs, pays 2 weeks of severance pay. What is a week in terms of hours? Because everything here kind of boils down to either hours or minutes. I made the assumption of a 40-hour work week. That's a pretty common knowledge within the United States. But if you came up with a different number there, you would just want to explain within your justification for the exercise. But if it's 40 hours a week, it's 80 hours total. And so I did kind of that calculation right here for you. So if we know that the average hourly rate for those terminating is $34.44 an hour, and we know that they're going to get 80 hours, you can see my formula up here, 34.44 times 80, we're paying each employee $2,755.20 to leave the organization. So we then want to expound on that and expand it to say all 1,000 employees, and I get 2.9 million number here is how I got that. So if I go back to our exercise here, and I want to show you the total separation pay. You can see they're going to ask you for a number of hours per week at 2 total weeks. That number matches about 2.9 million in separation. So I know that my numbers are correct, that I'm matching up correct. If we go back to that, to the other component of this, which is that exit interview, if you want to try and get to this outside of the calculator, we've referenced that it takes 45 minutes to conduct an exit interview for each one of those employees, right? So that's 45 minutes of this person's time as well. This person who's making 34.44. So if I wanted to look at how much time we're paying them, 34.44, I'll do kind of a 45 divided by 60. So 75% of 1 hour, right, is what we're paying this person. And so that's $25.83 to pay to, on average, for each team member who's leaving the organization to sit down, leave their workspace and go through an exit interview. If I multiply that times the 1,080, I come up with $27,896.40. So that's one component of the exit, right? Is looking at how much time we're paying to the actual terminating employee. And then in addition to that, we have the $33 an hour to the specialist, that we're paying for 1 hour total. And we're taking that times the 1,080, which is 35,640. So we're going to add those two numbers together. 63,536. So if I come over here, you'll see I squared it up on that exit interview. So if you get snagged, kind of a lesson there for you is that for exit interviews, it's not just the cost of an HR specialist, but you're also paying that person in front of you who's not being productive, at work, but you are paying them their rent. So that's how you get to that total cost there for the exit of them. All right, so moving on, we've gone over everything but unemployment. So I want to show you how the unemployment calculation is made. So organizations pay taxes and penalties associated with having unemployment that goes into the state unemployment insurance. And so in this case, it's telling you that for ups and downs, the turnover rate increased from 5.0 to 5.4. And so the text goes over two components of this expense to the organization. One, there's the penalty, which is the increase in the unemployment tax rate. It went from 5% to 5.4%. Again, when you're looking at a decimal, that's 0.004. That's 4%. Whenever you're doing a calculation on your calculator or Excel. And so the difference is 0.004. That's 0.4 of 1%, right? 5.0 or 5.4 minus 5.0 is 0.4%. And so you're taking that difference and you're multiplying it And this is an example. This is the direct example from the text. In this particular state that they give the example of, you are taxed on the first $10,000 of each team member's earnings. And so the number of employees plus the number of terms times $10,000. So it's trying to get you to show how much money are you spending on all of your employees, at least the first $10,000 for each one of them. So think about it this way: number of employees plus the number of terms. We know that they have 4,000 employees, but it's not just 4,000 times the $10,000. You also lost 1,080. So it's 4,000 plus 1,080. That gives you 5,080 total employees in which you're going to be taxed on the first $10,000. And so that is $50.8 million. Okay, so that's the total. Now the penalty is 0.4% of $50.8 million. So you're not paying $50.8 million. That's what you pay to your employees, right, in earnings. But you're paying a penalty of 0.4% towards that 50.8 million. That's 203,000. You're also just paying the unemployment tax due to that turnover over the next year, and that's where you've got your 5.4% tax rate now, right? That's your new tax rate, and not just it's the $10,000 times, in this case, just the number of turnovers. Now you're just paying your regular tax rate towards everyone who turned over in the organization. There are 1,080 total terms in the organization, and so that's $10.8 million, and you're going to pay a 5.4% tax on that $10.8 million. I went through all of that to say, the book's example assumes a state tax filing or state taxing the first $10,000 in wages. And while it doesn't state directly in the text, if you use the calculator, it's not going to ask for $10,000. It's going to ask for $7,000. So, you may be in multiple states as an organization in which you are paying different tax rates and different calculations of that tax rate. So it can get really complicated really quick. But I wanted to highlight that in case if you're trying to validate your numbers in both the calculator and on hand, it's going to be doing this a little bit differently. The calculator is assuming a $7,000 first $7,000 earning tax versus your text example, which was your tax for the first $10,000 of the employee's earnings. And so I did it both ways. I did the same exact thing as here, 0.4% times a much lower number, $35.5 million, because it's $7,000 times those 5,000 employees. That tax or penalty is $142,000 plus the 5.4. Again, the tax being taxed on only the first $7,000 of employee earnings times 1,080, and that's going to give you a total of 550,000. And so that's the number that you come up with in the cost of unemployment tax here whenever you do it based on this calculator, because the calculator is making an assumption of $7,000 is where you're going to be taxed, not $10,000. I will note, these last two categories are you can leave these blank, and it doesn't change your number. If you change and assume 4,000 employees earn more than $7,000, it's making those assumptions for you, and it's not making any change here in the cost of unemployment tax. The text does go into a more nuanced calculation because, what if not everyone in your organization makes $10,000, right? If you have team members who turn over in 2 weeks, well, then they're not making $10,000, so you don't have to pay the full $10,000 toward that person, or the full $7,000, right, toward that person. But it doesn't let you know in the exercise the average turnover tenure of your termed employees or anything like that. And so we just make the assumption that everyone is meeting the $7,000 standard, and we're going to be taxed on everyone within the organization. I pay the penalty for all of our team members, plus those in term as well. All right, that's going to give you a total separation cost. So you're going to want to add the expenses associated with exit interviewing, the admin functions of processing terminations, the separation pay, severance pay, unemployment taxes. That's going to give you your separation total cost. So keep that number. You'll have it written down, and that's one component of the four. The next is replacement costs. Within the calculator, you have tabs going across, and so we can start working on the replacement costs here. So there are different components here, drivers, that are ultimately going to lead to your total replacement cost. One of those is communicating job availability. So starting with the basics, again, we're now replacing terms, right? How many hires are we going to make? Because now we're not talking about the terms necessarily, we're talking about the replacements. Again, I make an assumption that we are replacing 1,080 people, right? That's how many people we term, and so that's how many hires we're going to. If you have a different number than that, again, include in your justification why you came up with a different number than 1,080. So one is you've got to communicate that you've got jobs available. They give a couple of different fees here. One is advertising and employment agency fees. So you pay, Indeed.com, or you're paying an applicant tracking system or some other job board, along with, maybe some staffing agency that you're using. The tax is going to give you a total here of $750 per term in which to go with, right? So if it's $750 per term, 750 times 1,080, that is $810,000 just for the agency and employment agency fees, or advertising and employment agency fees. And then in addition to that, you have an HR person who is spending 4 hours every single term communicating job availability. So again, our trusty HR specialist, $33 an hour times 1,080 times 4, right? Because it's 4 hours. 4 hours times 1,080 employees times $33 an hour is an additional $142,000 and $142,560 as well. So you can see that those are included here. The amount of time that takes to communicate job availability, as well as agency fees on the calculator. In addition to communicating job availability, then we get into the actual hiring process, right? So one of those components is pre-employment admin functions. This might be setting up a new employee, reviewing their I-9 documentation, etc. That's going to take 2.5 hours for HR to complete on every single new hire. Again, what's the hourly rate of this person? It says HR. I'm going with that trusty HR specialist rate of $33 an hour. And so it's 2.5 hours times $33 an hour times 1,080 new hires that we expect to make over that year. In addition to the admin functions, we get into testing and interviewing. So the text notes that it takes an hour to complete a pre-employment interview with each applicant that we're hiring, right? So we're not only interviewing one person for each hire, and this is where I appreciate the nuance that that the text goes into here, right? So if you had 1,080 people to hire, and somehow you managed to only have to interview one person, and you hire that one person every single time, that would be quite quite the gift of you to be able to find that needle in the haystack every single time, find the perfect hire, perfect fit for each one of your openings. In reality, we're spending more time than just that 1 hour, right? The text gives an average that for every one hire, 3 others were interviewed. That means for every hire, there were 4 total interviews completed, 4 applicants that went through the testing and interviewing process. Okay, so it's not just 1 hour at $33 an hour. It's actually 4 hours at $33 an hour times 1,080 total hires. For every, in addition, there's the testing expenses that also reference an expense per applicant. It's 36 total dollars per applicant. So again, 4 applicants per hire times $36, 1,080 total hires. And so that's going to give you the 2 calculations and 2 expenses associated with testing. Then we get into the staff meeting. So they reference that for every management job being filled, there is a 90-minute meeting. This may be, sounds like an interview or a discussion that a senior leader within the organization might be meeting with this person. Maybe it's to go over important information about the department or the organization. But the text in this exercise, the example lets us know that they are going to pay in this 90-minute meeting, the average rate of pay and benefits of the person conducting the staff meeting is $47.75. And it takes 90 minutes or 1.5 hours per management job filled. How many management jobs are going to be filled in ups and downs? It references that last year they did 17. And so you could take that number and say 17 total meetings at 1.5 hours per meeting at $47.75 per hour for the person conducting that meeting. And so at $47.75 times 1.5 hours times 17 meetings per year, I come up with about $1,200 for this expense of conducting staff meetings. Now, another way to come up with, if you didn't want to go with that 17, like, hey, maybe they didn't have a lot of management openings last year, or maybe they had too many, I don't know, right? Another way to look at this would be to go back to, you know, that about 24% of your turnover was due to, was at the management level. Now, it does say management and professional. So if I were to estimate, I might say 1,080 terms times 24%, 259. That's a much bigger number, right? I might be a little uneasy about saying this is going to happen 259 times for management positions. But again, when that 259 is also capturing professional positions, it's also more focused on external hiring. Maybe these were more internal promotions. Some of those positions have been built that way. So you can use either one of those numbers. Again, just reference how you got to the number of staff meetings that were conducted at that $47.75 per hour for 1.5 hours. Travel and moving expenses. So it references that travel expenses are $125 per applicant. Yeah, so 4 applicants per hire, 1,080 hires times 125. Again, come out here and put 4 applicants 1,080 hires at $125. 4 applicants times 1,080 hires times $125 is $540,000 just for those travel expenses. In addition, it references some moving expenses and pays to some of the hires. One of the mistakes that I'll see referenced here, you want to read the text very closely. So the text references that 1 in every 10 new hires is reimbursed an average of $75,000 in moving expenses. So sometimes people will just say $75,000 times 1,080 people, hired, and that is a big number. 81 million. $81 million, right? That's a miscalculation and an oversight on the part. What it references is that it was 10% received $75,000. So 10% times 1,080 of the new hires is only 180 new ones who receive $75,000 on average, and that's a much more palatable number. It's like that number is it's $8.1 million instead of $810 million or so, right? So they're spending $8 million to bring in to pay for people from around the country, maybe to come here, live, where ups and downs, run. So that's a big expense as well on the travel and moving side. Post-employment acquisition and dissemination of information. This is an admin expense. I make the assumption that it's our trusted HR specialist being paid at $33 an hour who's handling this task, and it references that it's at 75 minutes for each new employee. So and again, at this point, it's going to be 1.25 hours. 75 minutes is 1.25 hours times $33 an hour for our HR specialists. Do that over and over again, 1,080 times. And so I'm going to multiply those numbers together. And you can see it's an additional expense of $44,000 or so to handle the post-employment acquisition and dissemination information. And then it references to their medical exams, physicals that may be completed on all of the new hires. And it is $350 per physical. So in this case, 350 times 1,080. Additional $378,000 to have all of our new team members go through a medical exam. So adding up the replacement costs associated with the medical exam, post-employment acquisition and dissemination of information, travel and moving expenses, the staff meeting, the testing and interviewing, pre-employment admin functions, as well as communicating job availability will give you your total replacement cost. That's your second big number in total turnover calculation. The third is training. Again, we want to start with basics. We're hiring 1,080 employees. That means we need to train 1,080 new employees, right? A few basics here. One thing to remember, we are paying new employees to not be productive in a lot of cases, right? When they're training, when you're hired as a new professional, you may not come in and on day one, you're able to do everything of that job, right? We're sitting you with someone else in which you're not doing the work of that professional that you've hired to do. You're being trained, right? So we're paying you to not be productive in the literal sense. And so that is extra money. That is money that the organization is spending that is associated with turnover in this turnover cost estimation. There's a number of different elements here. One is equipment and new employee orientation. The text references that it's about $1,700 per new employee for new equipment, and that's times 1,080 new employees. So that's a pretty straightforward calculation on the equipment side. And then there is a formal orientation that's handled by the HR specialist, 20 hours per new hire. Okay, so we are calculating 20 hours of time for the HR specialist to conduct new employee orientation. In addition, it does note that the average cost of a new employee coming in is $32.50 an hour. So that's going to be important because it's going to help us to understand the additional expenses of paying a new employee to not be productive, right? We're paying $32.50 for every hour as an expense whenever they are not doing the actual work that they were hired to do. They're doing the training, learning about the job, the organization, instruction in a formal training program. So in addition to orientation, we're going to have them do a formal training program. It references that that's run about 12 times a year. It takes 32 hours. It's 4 8-hour days. So it's 32 hours per employee. Trainers make $49 an hour comp and benefits. 65% of the training cost here can be attributed to replacement for those who left. So that's important because they're, in this organization, maybe they're doing training, they're holding these formal trainings. It might be on soft skills, it might be on some particular new software, etc. Well, some of the people in the training maybe they're existing employees, they maybe are retrains, or maybe they're internal promotion, that sort of thing. So, what we're trying to get at is that, those expenses aren't associated with turnover, right? If I have, 30% of my, 35% of my training involves people who are, not new hires, then that's not a direct expense associated with turnover. That's just normal training expenses. And again, the book, while we want to appreciate that nuance, right? It's not just saying, hey, look, every training that we do should be attributed to turnover costs, right? That's not appropriate. So how do we get that number? 32 hours of training at $49 an hour, held 12 times a year, is $18,000. Of that $18,000, 65% of it is attributed to training new hires. So if we turnover, that gives us $12,000, $12,200. Then we're looking at the cost to send the new employees through, right? So it's not just the trainer sitting there in the classroom without the team members in there, right? So we have each new employee going through it. That's 1,080 new hires, making an average rate of $32.25, 32 hours in the classroom in which they're not productive. They're not doing the duties that they were hired to do. That's an additional 1.1 million. We're going to add those two numbers together and come up with 1,126,000. So that is the formal training cost associated with turnover. The next is on the job training. So here it references that on the job training is 3 8-hour days, so 24 hours per new employee. So all new employees are going to be going through this, right? And so the first thing I wanted to do is say, well, we know that all new employees are going to go through 24 hours, $32.25 an hour at 1,000 hours or 1,000 employees total, 1,080 employees total. That gives me this number of $835,900, right? That's just to, again, make we're paying the employees not to be productive, and so that's going to be considered a turnover expense. Then we have the experienced employee cost. So we need to have an expert, right? A subject matter expert, a trainer, who's good at their job, who is going to sit with or show the new employees how to do their job, right? And it's saying, look, we can have each experienced employee train 2 new employees at the same time. Okay, so we know that as the experienced employee, I'm going to be training 2 new employees at a time. So I'm not doing 1,080 separate instructions. I'm only doing 540 because it's 1,080 divided by 2, right? I'm not sitting with each one individually. I'm sitting with 2 at a time. So we're sitting with 2 at a time. It's only 540 instructions. I'm being paid an average of $41.25 an hour for those 24 hours. And that's going to give me this $534,600. Now, what it references during this time is that, not only is, I'm still getting some work done. So I'm not completely, not doing anything as the experienced trainer here on the job training, right? I may be saying, I'm going to show you how to produce this widget. We're going to go through the process of producing this widget. And so, maybe on average, I'm usually producing 10 widgets an hour, but because I'm going much slower, because I've got these 2 people watching me, I'm only doing about 5 an hour, right? Because I'm being much more detailed and talking with them about how I'm creating each widget. So I'm still creating and producing widgets. I still produce the 5 widgets. So I'm, again, not my whole hourly rate should be attributed to the expenses of turnover, right? Because I'm still getting some work done, getting about 50% of my work done. And so this number is truly the amount of money that we're paying these experienced employees, right, to be productive, $534,000. But about half of that is the forfeiture of their productivity, their normal productivity, so that we can shift them to train new employees. And so I'm taking this number, the 534,000, and I'm reducing it by 50%. And so to calculate total on the job expenses, I'm adding the $267,000 for the total cost of the on-the-job trainers, plus the new employee costs. And I'm going to come up with about $1.1 million in on-the-job training that I've got to calculate. So your training expenses that are going to be the employee equipment and do employee orientation, instruction in a formal training program, as well as the instruction by employees assignment or on-the-job training. Going through each one of those 3, adding them together will get you your training costs. So now we've got our placement cost, our separation cost, and our training cost all calculated. And that 4th element is going to be the difference in performance. And so the text is going to go over the difference in performance and talk a little bit more about, the amount of, if you're replacing employees who are poor performers with better employees, better performers, or you are, let's say replacing less experienced employees with more experienced employees, or vice versa, you're replacing more experienced employees with less experienced employees. There's going to be some difference in the amount of performance you would estimate based on that difference. And so it's quantified as what they call DP, the difference in performance within this formula. They use compa ratio, so they really use a proxy measure here. It's really hard to quantify this type of thing, right? So they're saying essentially, if I'm paying someone more, then ultimately I'm actually getting a better product, which, as you know, in HR is not always the case. We might have hired someone at a higher rate, but ultimately they weren't able to perform the job at a satisfactory level. But again, this is sort of a best estimate proxy measure of the difference in performance. The text doesn't give you enough, or the text exercise doesn't give you enough information to calculate this yourself. It just gives you the total DP, which is $510,000. And so that would be added into your expenses for turnover expenses. And so if we go to the calculator as well through the web-based software, we're just going to enter as a lump sum and say that it's $510,000. And so your total costs are going to add in that additional $510,000 as a lump sum within your total expenses associated with separation, replacement, training, and performance costs. So that's an overview of each of those four elements. I hope that was helpful. I'm always happy to answer any specific questions that you have. But remember, when you're answering these questions and then producing your narrative response, to make sure to provide as much justification as you can as to how you made your calculations, where they came from, and if you made any assumptions, the justification behind the assumptions that you made. So feel free to reach out with any other questions, and I'll talk to you soon. Bye-bye.